Hi guys, and welcome back to CashBright, your guide to investing in an ever-increasingly uncertain financial world. Wells Fargo's stock price has taken quite a hammering in 2020, falling around 55% since the start of the year. Now this is to be expected given the economic turmoil wrought by the pandemic. Loan defaults are up, interest rates are lower, and the bank has even been forced to close some of its physical branches. Now this all culminated in the bank announcing a $2.4 billion loss in its second quarter financial results, which is roughly equal to a loss of 66 cents a share. The rancid cherry on top for investors came when the bank announced a quarterly dividend of 10 cents a share, a figure much lower than many investors expected, even in the context of a stalling economy. So, is it the right time to buy this stock? Now, I know that sounds a bit absurd because the bank is doing rather badly. But when thinking about long-term investments, you have to of course look at where the stock price is likely to go. And I personally can see the stock recovering, at least returning to the pre-COVID level of around $50 a share. So why is this, I hear you ask? Well, I believe the recent troubles of the bank, such as the $3 billion settlements with federal prosecutors and the SEC over the fake account scandal, and the depressed loans market, are all transitory in nature. Like other banks, their earnings will rebound once the economy is able to return to positive growth. Whilst it's widely agreed that the shape of the economic recovery is not going to be a V, things will eventually improve, and this in turn will signal investors to return to buying this stock. It was also announced this year that the Federal Reserve is modifying the asset cap it had imposed on Wells Fargo so that the bank can participate in the government's business lending programs. Now this will allow the bank to lend money to businesses, and without it being limited by the $1.95 trillion cap placed on the bank following the fake account scandal. With so much lending required to prop up the economy during 2020, and almost certainly through much of 2021, the US central bank is likely to keep one foot over the brake in case it needs to raise interest rates in order to quell any risk of the economy overheating. When this eventually happens, and it will, banks will naturally be able to profit from being able to offer their loan products at higher rates of interest. Another rather compelling reason to back the stock can be found in the wacky trend of the stock market to date. Even if the key fundamentals of the economy or a business are not enough to attract the cautious investors of Wall Street, there is substantial positivity and liquidity from other investors to drive up prices, even above pre-COVID levels for some stocks. Now, Wells Fargo is a well-known bank, and whilst most investors' attention has recently been turned to tech stocks, these stocks will eventually run out of any surplus value, and when that happens, I think it's a good bet that speculators will look for new opportunities, particularly among the familiar names of the banking sector. Now of course, buying on the dip carries with it inherent risks. The stock's EPS, for example, is 0.93 for the trailing 12 months, and the lower than expected dividend of 10 cents reflects the bank's own pessimism for the coming year. But it's also true to say that with nothing ventured, nothing is gained. On balance, I therefore believe this stock is worth buying during its current dip and holding onto for the medium to long-term future. And at a price of around $25 a share, I think there's a great opportunity to possibly double your investment if you can see beyond the current economic uncertainty facing the entire banking sector. Thanks for watching. If you found this video to be helpful, please leave a like and don't forget to hit the subscribe button. And until the next time, stay sharp, stay hungry, and stay cash bright.